Well, hello, Matt. Good to see you again. Sorry for being a few minutes late today. It was my fault, and I'm glad we got started smoothly. But I'll work harder to make sure my technology is set up in time next time. How's it going?
Yeah, no worries. Going good, thanks. It's been an interesting week or two, but yeah, things are going really well, thanks.
Yeah.
How are you
What's
doing?
so good? I'm doing good. Just had a couple interviews recently. A few of them published. An interesting one with Warren Redlick recently. Yeah, it's got me thinking about a lot of things. And the macro market is usually what we start with. Seems like growth stocks are kind of hovering around these highs, and Tesla's kind of coming to a new local high. And we'll talk more about Tesla soon. And I think we're feeling pretty good about the macro markets overall. You know, there's this big tax bill. I know that's everyone's talking about right now. The revisions to the, I guess it's the infrastructure bill with the taxes and stuff on the tax rebates, or the rebates given to people who buy EVs made in the U.S. versus not. I mean, do you have any thoughts about that or the revisions to it?
The whole thing is just kind of crazy. Essentially, a Ford a vehicle that's manufactured in Mexico would get a decent credit, but a Tesla vehicle that's made in California, but not by union workers, does not get the full amount of the credit. Now, to be clear, the Ford plant, or the Ford vehicle made in Mexico, doesn't get the full. I think it's 12,500 at the top credit. But to have a significant credit just for based on kind of the structure of your workforce. I think there's lots of people that are kind of rightfully up in arms about that. I mean, it should be based on kind of the merits of the technology, not on the politics and the structure of your workforce. So yeah, I think it's kind of unfortunate that something as important as kind of transitioning the transportation economy to clean energy, to electric vehicles, is just going to kind of go to this political pandering. But it's not altogether surprising, kind of given where we are as a country right now.
Yeah.
I don't know. What are your thoughts on it?
Yeah, I sort of agree. I was just tweeting with on Rob Maurer's tweet earlier this morning, and it's like I try to look for silver linings in things, and of course, this bill and revising it like this, it's just outrageous. It's really like gaslighting. I think Elon Musk had like a couple things. It's really like makes you upset that like how could they do this, in like to Tesla, the most American made EV, is not getting like the best credit, is like it's favoring plug-in hybrids and all this stuff. But I try to look at the silver lining. I mean, at least it's something going towards EVs. I mean, the government is spending money on this, right? And the government spends so much money on so many other things that are much more wasteful, in my opinion. The government is just very inefficient by its nature in spending money. And and the silver lining point is like at least something is going towards helping to stimulate EV transitions by the legacy automakers. And even if Tesla is being sort of wronged in some way, it's not going to hurt Tesla's big picture. They're going to succeed no matter what. I just think the other silver lining is, not only will these automakers, at least survive a bit longer, not go bankrupt as quickly as they might otherwise have gone bankrupt with these helpful EV subsidies to help them, build what are losing products for them now, money losing products for them now. But the plug-in hybrid encouragement initially, that will probably be ramped up even more. That helps keep the auto dealers in business longer than they otherwise would be. Because if everyone transitioned to 100% EVs right away, tons of auto dealers, a significant part of our economy would basically be out of business really quick, because they make all their money off of servicing vehicles. So the plug-in hybrids need the servicing still. So you have to bring it back to the dealer for the servicing, the oil changes or whatever. And so they keep their businesses going. It's not, perfect. True capitalism is like just let the, losers fall and the chips fall where they may, and the losers just go out of business. But when you rip the Band-Aid off, too quickly, sometimes it can cause a shock to employment and all kinds of stuff. So, I'm trying to look for silver linings in all of it. And to me, it's a good progress we're making with this bill. It's better than no bill at all, in my opinion.
Yeah, I think it's a fair point. I'm sure there's probably some portion of the population which would agree with you that we should just kind of let the chips fall where they may, and the dealers were resisting electrification changes to begin with, so we should get them out of business. But I mean, these are real people that have families and jobs. I live here in Michigan and kind of lived through the whole bankruptcy situation in 2008 when tons of people I knew lost their
Yeah.
jobs. People were worried about their families, so there is going to be this transition, but I think there is some merit, like you're saying, to make it kind of more gradual and predictable to some degree.
Yeah.
But I'm curious your thoughts. One of the things you brought up is kind of how this may prolong the transition with plug-in electric, or the hybrid drivetrain vehicles. What's your thought on kind of plug-in hybrids as a transition play to as we get to clean economies or a clean transportation? I've heard both sides of this argument where some people say, oh, those aren't real electric vehicles, and they're still polluting, and so it's kind of a worst of both worlds. And I've heard other people, even on kind of the green side, saying, hey, listen, if it gets more people to offset some amount of carbon intensive miles, then it's a net good overall. And with a limited supply of batteries, you couldn't transition to 100% batteries right now anyway. Where do you kind of fall on that thought of plug-in hybrids having some utility?
I mean, I try not to think in terms of black and white, like right or wrong. I try to think in like a spectrum, and no, to me, obviously at one end of the spectrum, or I guess the worst end of the spectrum is no EVs, no plug-in hybrids, just everything internal combustion engine from here on out. That's the worst end of the spectrum. But as you progress up, like to the other end of the spectrum, would be like everything's 100% pure EVs, run off of solar and battery storage, or nuclear fusion or whatever. I don't know, but like that's the other clean energy, transportation spectrum end. But in the middle somewhere is the plug-in hybrids. I just don't know exactly how close it is to one side or the other. Personally, there's arguments to be made. Oh, it's closer to. It's pretty much not much better than being completely internal combustion engine dependent. And some people are like, well, it's pretty good because people usually just drive around their neighborhood 10 or 20 miles a day, and most of it's EV used anyway. So there's two sides to that argument, but it's somewhere in the middle. And so it's better than no EVs or no plug-in hybrids at all, I'd say. What do you think?
Yeah, I kind of think the same. But before I bought a Tesla, I had a Chevy Volt, and it did offset the majority of my miles. I mean, at that point in time when I bought that car, I couldn't really afford a Tesla, so it was the most economical choice for me, and certainly saved a lot of emissions over the 100,000 miles that I drove it. So I think it has its place. I think it will kind of become increasingly irrelevant over time as as BEVs approach actual cost parity with ICE vehicles. Whenever that happens, it's going to be too expensive, I think, to have both an engine and a motor and battery pack. I think there's some engineering trade-offs you need to have to do that. So I think there will come a point probably in the next 2 or 3 years where that those BEV kind of compromise vehicles probably won't make much sense for much longer.
Makes sense. 1 sec, Matt. Someone mentioned on the comments my mic. Let me just turn off my mic and off and on. 1 second.
Yeah, no problem. We've had some issues with that in the past. I think my sound quality wasn't the best last week or so. So appreciate everyone's patience as we kind of work out some of these technical items. One of the downsides of going live, I think. But
yeah,
the nice thing is we get the questions.
Can you hear me now? Better. Is it okay?
I think so. I didn't notice it too much, to be honest with you, but
you sound a comment. I wasn't sure. So, okay. So the next topic, I guess, is the Roblox ruling we wanted to discuss from Epic versus Apple. I mean, I think this is a marginal win for the big platforms on Apple's App Store, Roblox. I don't know the full downstream effects yet. I think it's still a work in progress. I mean, Tim Sweeney and Apple, and Fortnite don't seem completely very happy. They think there's still a lot of work to be done. And I think that's good for, we focused a lot on, we like Roblox. We talked about it a lot. So I think there's still upside potential for Roblox and the others, whether it's Match.com or, all these big providers on the App Store for Apple. I do think there's more upside if the court rules in their favor versus Apple's kind of monopolistic tax on their ecosystem of apps. What do you think, Matt? Have you looked into it at all, or?
Yeah, so I found it kind of interesting. It was, so Epic was, suing Apple, and I think it was kind of a split win for them. They did not sufficiently prove, according to the judge, that Apple was a monopolist. So there was a good amount of kind of back payments that Epic had to pay Apple. So I think, from their perspective, it wasn't a huge win, but from our perspective as owners of Roblox, I think the one really important decision which came down was that Apple can no longer prevent developers from linking to external payment pages. So have been some estimates that Apple's share of Roblox's revenue is around $900,000 a day. So you're talking, close to $230 million per year, if that is to be believed, that at least could be potential for Roblox to circumvent. They, launch that page, and a good chunk of its users go directly to that kind of direct pay option for Roblox. So I think that's why you saw a good bump on Friday when this ruling came out for companies like Roblox. And I think it sets a good precedent that Apple really did kind of extend too far, I think, in trying to restrict so heavily, not only what apps can be on there, but restricting the amount or the ways that they can pay, just to ensure that Apple got 30% cut on all revenues. That was just a bridge too far, I think. So I think it was a good win for Roblox, clearly, but also just kind of for capitalism. I think, it's not good for the whole ecosystem when one giant can take, 30% of kind of any startup developer's profit or revenues, even not even profits, just revenues.
Yeah.
So,
and Apple is such a big company. It's like a big corporation. Like, even if Tim Cook thought it was unjust, he couldn't single-handedly make the change and say, hey, we'll lower to 10%. That company is ruled by shareholders, and the board that, is dependent on the shareholders voting them in, or, they're ruled by maximizing profits. They're so big, they're just ruled by maximizing profits. Basically, they have some other things, but above all, they want to keep their profits maximized. And so, of course, even if people individually at Apple think like, oh, this is kind of wrong, they're not going to, it's going to take a court to kind of force it to come down, in my opinion. And long term, I think this is a big deal. Like, long term, if you look out several years, into the future with, the entire, Apple taking over the world in some degree with their, phones and internet use, people using computers now more Apple than ever. So I think lowering this from 30% as low as possible sooner than later is a big help. So we'll see how that plays out, but definitely it's good for Roblox and Fortnite and other providers on using Apple's system.
it's gonna be interesting to see though how they actually implement that, because there is some benefit of just kind of relying on Apple's payment system. It's probably not worth 30% of their revenues, but at the same time, now they have to figure out how do they redirect those customers outside. Maybe they have to offer like a 5% discount, which cuts into some of their savings, to avoid that ecosystem. So it'll be curious to see how Roblox and other companies kind of open up or implement this new opening.
Yeah, absolutely. Okay, so I guess let's move on to Tesla-related stuff. I mean, we talked about the bill a little bit already as part of the macro markets section, but more interestingly with Tesla, anyone who's on Twitter who's followed us has probably seen some discussions this past weekend about people in the financial community that seem that kind of just talk like they understand Tesla's autonomous vehicle driving technology, and then when you kind of drill them on it, they talk very confidently, but then all of a sudden they throw in things like dependent on 5G and edge computing, and the battery can't support it, locally. They're throwing these things that, if you weren't watching it close, if you didn't know Tesla's, technology, you would just go along with it and be like, oh, this person's so smart on everything, sounds so smart, that makes sense, And as an anecdotal story, my dad, who I think is super smart and bright and he has a Tesla too. He's been driving it, uses the autopilot, loves it. He doesn't dive into the details nearly as much as me, right? But as a
Yeah,
test,
but he's more attuned to kind of autonomous vehicles as an opportunity than the average citizen, right?
Yeah, he even brought the idea of autonomous vehicles up to me back in like 2012, before Tesla and Elon started talking about it. And I thought he was crazy. I was like, no way. He's like, yeah, in the future, in 5 or 10 years, there might be autonomous vehicles. And I was like, what? You're crazy. So he's very futuristic thinking in general. But he's not like a Tesla fanatic like me. Like, he doesn't spend so much time studying them like I do, obviously. But at a family dinner the other night, 2 nights ago, I just, as a test, was like, here, can you listen to this 1 minute thing and tell me what you think? And I pulled up the 1 minute clip that I think Warren Redlick had tweeted out that I retweeted or whatever. And I just let him listen to it without any kind of context of what I was going to ask him about it. He listened to it, the whole thing. And then at the end, he's like, yeah, that makes a lot of sense. I agree 100% with what she's saying. And I was like, what? I was like, you failed the test, Dad. And so there's so many people that are just kind of, if you're not really if you're not a specialist on Tesla compared to then you would just believe it. And so there's a whole, I think it was like a Venn diagram. Like, there's a Tesla Twitterverse circle, and we all kind of understand it in much more than most people. But then you have a huge financial Venn diagram circle, financial industry that, those people are generally smart on a lot of things, but they're generalists. They can't be a specialist on just Tesla, but they are part of that other circle, and they all sort of have this huge disconnect and think like 5G is required maybe or that like the local compute power on the Tesla, the battery can't support it or something like that for it to be done, on board the Tesla. So there's this huge disconnect. And it got me thinking that maybe, I think medium term, there's a lot more upward possibility for the Tesla stock price, just because there's such a huge disconnect still. And as that bigger circle in the financial industry of the Venn diagram kind of comes to realize that, hey, Tesla's doing things different than Waymo and everyone else, as they start realizing it with this full self-driving beta, then maybe there's going to be a lot more buying of Tesla stock. That's sort of what I'm thinking. But what are your thoughts, Matt?
It did cause quite the hubbub over the weekend. I mean, it was kind of had my notifications blowing up over the weekend. I was spending a little bit more time than I otherwise would have liked on Twitter, kind of dealing with this. But yeah, maybe for those who didn't see that, the kind of core argument that was being made by this this fund manager who allegedly specializes in like tech and growth stocks was that Tesla's approach to autonomy does not have 5G implementation. So, and she even said the word that you need, edge computing with 5G in order to kind of make those decisions in real time, so that you can kind of save the milliseconds to react instantaneously. But that actual line of thinking just kind of makes no sense. In fact, I mean, edge computing is the actual philosophy of having your compute right next to the sources of data. So in Tesla's case, you have the data input is what's coming in from the cameras, and the decision making that's being done by the FSD chip is to avoid any sort of latency with needing to go to some sort of central hub. If you had to send like an incoming yellow light to Fremont, California, to have some massive supercomputer there tell your car what to do, and then go send that signal back to the car, I mean, that would take way more time than is needed, and it would just drive down safety, it would drive up costs, and it's just a completely impractical way to think about it. Yeah, it's a total nightmare. So it's just kind of revealing that people, well-known, quote unquote experts can be pushing a narrative like that, which just, if you know anything about what's actually needed for this space, it's just very kind of showing that they don't really have a depth of knowledge. And a lot of the pushback that she had over the weekend, even didn't make a whole lot of sense either. It was kind of appeals to authority and say, oh, just Google it. Everyone's doing it. But yeah, so anyway, I do think it could be a catalyst. I've been kind of thinking this for a while, that, the general public doesn't really know much about Tesla in general yet, let alone kind of autonomy. And I think there's, whenever this button goes out, my thinking is, every time I show my car to people, it's always like, oh my gosh, that's so cool. And it kind of prompts them to be interested in driving a Tesla. But I can imagine if it's doing if I can actually physically show people kind of what the beta testers have, that it can actually stop and turn and, cross over the double yellow line when there's, an Amazon delivery truck that it needs to pass, and do so safely, and, get over for bikers and all the stuff that software can do now, I would imagine that's going to, blow people's mind because they're not expecting this. I mean, the general public does not know that this technology exists. And even a lot of the quote unquote experts don't really understand it yet. So I do think that there's possibility that you could see some sort of gap up in the next couple months. Not investment advice, obviously, but we tend to think in probabilities. And I think there's a decent probability that this could be some sort of catalyst to move the stock back towards all-time highs.
Yeah, absolutely. So we'll see how it goes after the button comes out, and the take rate of full self-driving, and hopefully the regulators don't screw everything up. And I saw there's some latest news about NHTSA like trying to get other automakers to comment on Tesla's like 1 or 2 crashes. It's crazy. Like Tesla has 1 or 2 fatalities. There's like 1,000 fatalities a day from auto crashes, and like the 1 or 2 a day that Tesla does, NHTSA and the regulators try to focus on, and it's like, oh my gosh, it's freaking nuts. But we'll see what happens. That's my fear, is the regulators come in and are pressured or by lobbyists or powers that be that say put a stop to Tesla's full self-driving. We don't understand it yet. Just like, and then it's like there's some order to like stop it. Which would be awful. It would kill a lot of people that don't need to be killed because of delaying it.
Yeah. I mean, I heard I forget who it was, but somebody kind of used the analogy that, most people would rather, have a 1 in 1,000 chance of being killed by a drunk driver than a 1 in 100,000 chance of being killed by an autonomous vehicle. Like, even though it doesn't make sense, like the odds are, you should just want the safest possible vehicle. But I think there's a preference to just, say, oh, well, I'd rather have a human kind of no matter what. And autonomous vehicles, if they don't do exactly the perfect thing, then just let's get scared and pull back and overregulate. And I think that is a risk. I don't think it's highly likely. I do kind of tend to agree with Elon that data will win out in the end, and Tesla tracks this data obviously very closely. But it's a risk for sure. And especially when you get, some of the senators pushing more aggressive restrictions, kind of in a play to politics and manufacturers that are in their home state, it doesn't help.
Yeah. I mean, it's sad, but whenever I think about politics, I get sad. I got to try to think of silver linings to like not be too upset. So, all right, other topics with Tesla. There was the news that no one's really talking much about of the energy desk being formed. And immediately I was thinking like Enron and like negative connotations, but, I know there's like a big energy trading industry. When I worked at UBS investment bank many years ago, they had an energy trading team and it was doing well. And I didn't fully understand it, but I'm sure you have some ideas on that. What are your thoughts about this Tesla energy desk?
Yeah, so for those who maybe don't know, my background before I joined Emmet here at Good Soil, I was managing a fleet of wind assets. So I was actually working directly with our energy trading desk at the company that I was with. I'm kind of very familiar with it. I've spent a lot of time in wholesale energy markets. So I think I understand a little bit about what Tesla is trying to do here. So it's not, trading, I think in general kind of has a negative connotation, but it really is. You do need a lot of special authorizations in order to access those wholesale markets. They are highly regulated and they're highly varied, not only by country, but also by region. So where you are in California, for example, there's, CalISO, which is the grid operator there, which has a whole set of different rules than where I am in Michigan here, which has a grid operator called MISO. I think what Tesla is trying to do, which is something that I've been advocating for a while, is starting with their hardware. They're building out this I think of it as a fleet of hardware assets. So you've got solar and storage assets, which are kind of being deployed every quarter, but cumulatively, it's growing into this bigger and bigger base over time. The customers that actually bought those are taking the majority of the assets, the asset value, because they're getting the energy that's generated and using batteries for backup power, and that's all well and good. But there's this whole suite of other services, such as capacity or reactive power, or some of these kind of niche revenue streams, which are only available in wholesale markets. So, Tesla has not been registered with most of the grid operators or with most of the public utility commissions, which would be needed to in order to say you've got, a gigawatt of solar assets and you could conceivably get, a recurring revenue stream just by offering those into some of the ancillary services market. So what Tesla's doing now is starting to build out that team so that they can, get those registrations and they can start monetizing this growing asset base to access the revenue streams. And presumably they'd share some of that with their customers who actually own the hardware. But in my mind, it's a really good thing for them to be doing. Something I thought they would be doing, and I'm just glad to see that they're actually going to be doing it now. I actually made a video about this probably 6 months ago before I joined up with you, Emmet, and was kind of looking at the economics of, imagine you have a house that has a solar roof, power walls, 2 power walls, and an EV. And I took a stab at quantifying how much revenue potential there was there that was not already being accessed. And I came up with around $400, of which I thought Tesla could maybe take $200.
$400 a month or a year?
Yes. Yeah. Sorry, a month. Yep.
Okay.
So, it's $1,200 a month, which would be, or sorry, $2,400 per year that Tesla could theoretically monetize, and just hasn't really done so yet. So I'm really excited that they're going to start this out. It's not going to be a huge needle mover in the financials, immediately. But I was doing some math and kind of projecting out what I thought it could be in 2030, and I came up with $8.5 billion of operating income.
Wow.
So it's, people are often asking when is Tesla Energy going to, become a meaningful player, and it's going to start out really small. But with this revenue stream in particular, I kind of think of it as energy as a service. It's not like an FSD purchase option where it's kind of like a one-time, and it's almost linear where it just ties direct. It ramps directly with your sales. But with energy as a service, it would actually ramp with your cumulative deployments of hardware. And this hardware lasts, 20 to 30 years, generally speaking. So, you have kind of a cumulative impact, which will really grow over time, especially as Tesla enters new markets and kind of ramps this trading capability worldwide. So I'm really excited about it. It'll be a slow burn for sure, but I think it's going to just surprise people when 2030 rolls around and all of a sudden they've got this huge energy business.
Yeah, it just speaks to the conglomerate of businesses that Tesla is building out, whether it's insurance, this new energy trading arbitrage desk, or energy as a service, as you call it. I think there's so many business opportunities growing within Tesla that a lot of folks have no idea about or aren't calculating as part of the stock price in the future. So it's exciting. There's going to be more of these types of units of business within Tesla conglomerate that will be popping up, I think, in time. And I think by 2030, it's going to be amazing. Like, it's going to be like the Berkshire Hathaway of energy, all in one company.
I mean, you can imagine by that time, they'll probably have the heat pump deployed at some amount of scale. Their solar roof will be, they talked about wanting to do 20,000 solar roofs a week as the long-term goal. So that will be a very significant hardware business. And then on top of that, they'll have the energy as a service business, which will just continue to monetize these assets going forward. And then you've got, optionality of all these other business lines. Like, who knows what they're going to be doing with AI 10 years from now? I mean,
the humanoids will be deployed to create a whole new stream of tons of big businesses. That could be the biggest business of all in the future, the humanoid, section, that's like displacing all of human labor, basically. It's crazy. So yeah, it's exciting. A lot of fun stuff to be excited about with Tesla for the next 10 years. Like in 2011, 2012, or 13, when I first started investing in Tesla, I was excited because like, oh, brand new car, it's going to be better than other cars. Self-driving wasn't really even in my vocabulary other than when, my dad had brought it up to me early. But I didn't put 2 and 2 together with Tesla. And then self-driving became a big thing. Now here we are 10 years later, and there's so many incredible things for Tesla to be venturing into. I can only imagine in 10 more years, how much more Tesla will be growing into things. So it's exciting. So anyway, with that, let's maybe we'll start. Anything else you want to cover? Should we go to the Q&A portion, I guess?
Yeah, why don't we do that? I'd love to just keep going on, but I think I'd lose a lot of people's interest because I love this energy stuff way more than I think anyone else does.
Yeah. No, we'll go into it more next time or one of these days. All right, let's go to the questions. All right, first one from Andrew Bazile. Question for Matt. Would that $400 a month energy service potential remain that valuable with high penetration of solar plus power walls? Have you shared this analysis in greater detail elsewhere?
Oh, good. I get to energy nerd again. This will be fun.
Yeah.
So maybe I'll start with just, I did the detailed analysis that I was talking about here. You can on YouTube just look for Tesla Energy as a Service. I had a channel before I joined Emmet. It was called Spark Spread. So I kind of laid out all the different assumptions and a lot more detail there. So yeah, anyone who's interested, yeah, just look for that Tesla Energy as a Service from Spark Spread. That goes into the details of the calculation. But what I try to do with that is really take into account what Andrew is getting to, which is that kind of pricing for batteries today is higher than it will be if you're assuming that Tesla is making terawatt hours per year in the future. So it really should drive down marginal pricing for battery revenue streams. So I did a decent amount of research back when I was putting this video together on what kind of current historic and current energy pricing was for battery services. And then I projected forward a rate that was much lower than that in order to use to generate the $400 per month figure. So, and it also excludes some revenue streams which Tesla potentially could access. So for example, energy arbitrage, so selling energy when prices are high and buying energy when prices are low, which is what AutoBidder does. I assume that full benefit stays with the asset owner, which may not be true. So there could be potential for more margin upside there, depending on how it shakes out. So no, I do think it's a reasonable kind of middle of the road estimate, which would be sustainable in the long term. And if anyone's interested, yeah, go look for that video. You can kind of see all the individual assumptions I put into it.
Next question is from Calistoker123 on Twitter. You studied Elon Musk for years now. What is something that you understand about him that others don't? Yeah, I mean, I saw that question last night, and I mean, I think a lot of us that have been following Elon and Tesla for at least a few years closely, understand that he's very genuine. He's not, he's very driven to make humanity better. He's trying to absolutely maximize his time and efforts to, increase the chances of, consciousness, to exist longer by, going to Mars. That's his ultimate goal, is to colonize Mars and kind of have an insurance policy for what he calls like the light of consciousness, I think, or something. So I think people who don't follow him super closely don't fully grasp that or understand that. They kind of just think, oh, here's some multi-billionaire magnate, another one of the Jeff Bezos type or Bill Gates type. They have their causes, but they're really, you don't. It's not quite as charitable living. I would say Elon Musk is very selfless. Look at his house he's living in. He doesn't think of himself. He wants to improve a civilization or humanity, as best he knows how. And he's smarter, than virtually anyone else I've ever come across, observing or encountering. Not I've encountered him, but observed or read about or anything. Like, I can't think of any historical person that's as smart as Elon is today either. So it's like you almost have to think. The way I think of it is like whatever Elon says, you have to really take seriously, and you start from that and work backwards to figure out why he said what he said is true. Like, it's like weird. It's like counterintuitive. Most people, they say something and you're like, well, let me see if I can agree with them. Well, whatever Elon says, I feel like automatically I sort of have to agree with it. I now know, but I have to then try to do the work to work backwards to figure out if there's any reason I shouldn't agree with it. It's like opposite of what everyone else is saying. I don't know. That's what I think. What are your thoughts about this, Matt?
Yeah, I thought a lot of the same things. I mean, for me, it really clicked when I several years ago when I read that whole Wait But Why series on Elon Musk. If anyone hasn't read that, I highly encourage you, go to waitbutwhy.com and find the Elon Musk series. because it really does a good job of kind of laying out why he started the companies that he started, what his missions were. And it really all started with him, like you were saying, Emmett, kind of viewing what is like the biggest threat to humanity and what does humanity need most. And, it's clean energy and like a backup to civilization, and which you could view it as a negative and say a backup for civilization in the event of catastrophe, or you can spin it to positive and say, an expanding, kind of multiplanetary species which spreads light of consciousness. But it really is like the reason he's enduring so much pain in building these companies, being CEO of like 2 different companies plus starting a boring company, all these things, it's really not money. It's to advance civilization. So I think a lot of people who are maybe casual observers don't understand why he even is interested, why he started both of these companies. They may think it's a pursuit of wealth or just some power struggle, and it's really not. It really emanates from his thoughts that he had back when I think he was when he was in South Africa as a kid, and just kind of thinking of what humanity needed. So I think that's what a lot of people still don't understand, is that he's very genuine with these objectives, which is why he's done what he's done for the last 2 decades.
Yeah, absolutely. From Stocks with an J on Twitter, are you long Bitcoin or Ethereum? Any other cryptocurrencies? Why or why not? Well, our fund is not able to invest in cryptocurrencies directly in any shape way. We've talked about MicroStrategy and kind of selling volatility or selling premiums on MicroStrategy to kind of collect the volatility premium on it as it's related to Bitcoin. But personally, I have some Bitcoin I've had since I think 2011, but I lost half of it on Mt. Gox in 2013. It's not much, I invested as much as I could in 2011, which wasn't much money, but at a $29 cost basis, it's worth a lot more now. But if I invested the amount of money I have now back then, it would be worth like, billions now. But, back then, a few $100s or $1,000 was a lot of money to me, obviously, back then. So
you'd be Satoshi if you invested that much back then.
yeah, I don't think I would have been that aggressive. Maybe a lot more, but not. But yeah. So I have Bitcoin personally. I still think there's a place for Bitcoin as sort of a digital gold. I think, I worry that, and Ethereum, I think, is really interesting. I've thought about diversifying to Ethereum more, but I'm not ready for those tax consequences of liquidating Bitcoin just to diversify to Ethereum. But maybe at some point. But I think Bitcoin and Ethereum, what I worry about the most, and NFTs, I think, are kind of helping to get more exposure to Ethereum, especially. Is the next crash. There will be a crash again, and Bitcoin has crashed 80% or more, I think like 5 times since I've started investing. It's recovered every time, obviously, but sometimes it takes years to recover. But if the next crash is another 80% crash, look at DeFi. Like, what's that going to do to the whole DeFi ecosystem, right? All these people borrowing, levering up, and it's just going to wipe out so many people all at once, and it's going to create a massive hole in the crypto. It's just going to hurt a lot of people badly. And if Bitcoin's bigger than it is, if the whole crypto space is bigger than it is now, let's say Bitcoin gets to 100,000, 200,000, you have like banks putting 5% of their balance sheet in. People are taking loans out against their crypto to buy a house or using it as collateral for this or that type of business arrangement because it's somewhat stable, and then suddenly it crashes 70 or 80% again. I mean, that's going to take down the economy. Then I've talked about this before. Then I can see a scenario where the U.S. government or governments have to print more fiat currency just to help, support and prop up the crypto economy that has become so big to avoid a massive catastrophe to the economy. So I just that's what I worry about next. But I do think crypto is here to stay, and Bitcoin and Ethereum for sure I think are here to stay. But I do worry about the next major crash. What do you think about it, Matt?
Yeah, I think, if anyone who's invested in this space needs to be accepting of volatility. So, whether it'll be another 80% crash or not, I'm not sure, but there certainly will be that crash. I was long Bitcoin earlier this year. I got out of it, once I had a nice gain. But I got back into, or I got into Ethereum, I don't know, probably 2-3 months ago. I was doing a lot more research on Bitcoin and some of the. I don't want to offend the Bitcoin maximalists, but there are, I think, criticisms of Bitcoin where it can be a one-trick pony potentially, where all it does is store a value. It does that very well, but that's its really primary purpose. That may change with Lightning, and some of the stuff that you're seeing in emerging economies where the Lightning network is being a little bit better utilized. But on the whole, I kind of like the utility that Ethereum offers for smart contracts. NFTs, I think, are probably a little bit overblown. I do expect a huge crash in NFT market at some point. But that's not all that Ethereum is built for. I mean, it can do a lot of other things that I think will continue to grow, and I think you'll see more use cases for Ethereum going forward. And I like the whole transition that they're doing to proof of stake. So I do think that will create some upward pressure on Ethereum prices. I'm not sure how long it'll be sustained, or what the end goal there will be. But I like Ethereum for now. I think so. I've got a small stake in Ethereum for that reason, which I'm planning to hold until that whole transition to proof of stake is done.
Next question: Will you consider reducing the minimums required for your fund? That's a good question. We've talked about this in the past. We hope to offer an ETF at some point. We know the right people to talk to help us get that started. It's certainly an undertaking, but that would create no minimums. Then I think that's the next step. Instead of reducing the minimums for our current fund, which we're still kind of building out, I think the next, after this, we'd keep this fund going, obviously, but at some point we would consider setting up an ETF, and then anyone could invest in it. It wouldn't have quite as advanced options trading capabilities that our fund engages in, but I think it could still be a solid return. It'd be comparable, maybe. I mean, we play in the same universe as ARK Invest, for example. That's sort of our internal benchmark in a lot of ways, is we want to try to beat them. But I think they're great. They're a great ETF. So people who want to invest in our fund that can't. There's some great ETFs. I know Gary Black put out an ETF recently. I'm not sure how it's performing or what is all in it, but it's something to look at perhaps. Or ARK Investment has great ETFs. We love their analysts for the most part. And so, I mean, there's a lot of options out there, but one day we hope to have our own ETF perhaps.
Yeah, and just to clarify, the reason we have the minimum so high, it's $500,000 minimum, and it's because you need to be an accredited investor in order to legally invest in the fund. But our trading strategy is aggressive, so there's a high degree of risk. So we don't want, if you just barely meet the threshold for an accredited investor, we don't want you to put in half your net worth and have the potential for if we're wrong with some of the strategies we're pursuing, we don't want the high risk strategies to burn half of your net worth. So that's why we've done it the way that we have, just for kind of avoidance of doubt, or for some clarity.
Yeah, very high risk. So people who we're not hedged, really. We're more like a special situation, long only fund or something. I don't know what you would classify us as. I mean, the vehicle is a hedge fund vehicle and type of instrument, but it's really the strategies are very asymmetric and looking for 5x or 10x or more returns. A lot of times we put a bet on or a strategy on that turns into, it gets wiped out, and then another thing might triple pretty quickly. Or so it's just it's very volatile. It's very high risk, and it's really for if you want something, a high net worth family office or something wants to get a risky diversification as part of their portfolio, they could consider us in our fund and know that half of the fees would go to charity too. From Nick E. Do you have an opinion on Root or Hippo compared to Lemonade? I haven't studied Root or Hippo. I assume they're sort of like one of those insurtech companies. My understanding is Lemonade is the only insurtech play that's really building out its own backbone infrastructure. But I don't know enough about Root and Hippo to say that with confidence that they're not doing that. So I should look into them. I'll check them out to see. Have you heard of them?
Yeah, same. No, I don't know anything about them, so I'll put them on my list.
Yeah, I mean, there's lots of
Yeah.
insurtech companies out there popping up that are basically just kind of white branding existing legacy insurance providers technology. They try to white brand it to make it, a better user interface, better presentation, and but they're very limited on the flexibility with their white branded experience and updating it and such by the legacy insurance providers, dino technology. So anyway, let's move on. From Nick E, do you think this macro environment is good for a Palantir? CPI would inflect down in coming months, but if inflation gets worse, these legacy companies will need a digital twin to stay competitive. I mean, we haven't done really a super deep dive on Palantir. I know a lot of folks in the kind of our Twitterverse are excited about Palantir, and that's bullish for me. And I've studied a little bit. I've heard a couple talks, but personally, I don't know enough to really answer this question in an intelligent way. But I don't know. What about you, Matt?
Yeah, same with Palantir, but I'll take maybe the macro piece of it, which we have been thinking a lot about. Yeah, we were, I think, really concerned about inflation. At least I was really concerned about inflation earlier this year. I am getting a little bit more comfortable with this kind of new normal of the amount of money printing that's going on, and CPI still not getting out of hand. It's a little bit counterintuitive, but I think a lot of the things that Kathy Wood has been talking about are certainly true. That inflation does create deflation, or technology creates deflationary pressure. So while the money supply may be increasing at an aggressive rate, the actual cost of a lot of areas of the new economy are actually decreasing. So you can obviously see that with Tesla, with the average price per vehicle coming down. If robo-taxis become a reality, then that will just decrease the cost of transportation nationwide and worldwide, which it acts as a deflationary force and kind of a counter to some of the money printing that's been happening. So we may see a temporary spike, I think, in some inflation if the federal policies get a little out of hand, if the Fed policies get out of hand, but I think in the long term that will be counteracted by just increasing efficiencies from new technology, from genomics, from artificial intelligence applications of every sort, which I think will be coming fast and furious in the next decade.
Next question from JB. What are your thoughts on Zoomtopia and the recent pullback? Yeah, I'm very surprised Zoom's kind of coming down. They're printing a lot of, they're making a lot of money. They have great margins. I guess there's, the market is, they drove the price up so fast in the last year and a half. There's a lot of more consolidation than most people expect, I suppose. Zoomtopia, I know that's going on right now. I have not had a chance to actually engage or experience Zoomtopia yesterday or today myself. But I do want to read people's reviews of Zoomtopia. So if in the comments anyone in particular that has interesting reviews of what's going on at Zoomtopia, I would look at that in addition to the other folks I would read the reviews of. Do you have any thoughts about Zoom's pullback or anything, Matt?
Yeah, I mean, Zoom's been, you could call it a recent pullback. It's been up and down, bit like a yo-yo for a while now. So, we've reduced our exposure to Zoom in the fund. So, we're watching it a little bit, but we need to, I need to see some of the Zoomtopia summaries that are out there before I really comment.
Yeah. And just to be clear, Zoom is like, we have, I don't know, 10 or 15, 10 or 12 underlying. Zoom is one of the smaller, it's hard to be fully up to date on everything. We're fully up to date on Tesla. It's our largest probably, and there's a couple other large ones we haven't disclosed yet that we stay fully up to date on. But, some of the smaller positions that we have small kind of bets on or whatnot, it's hard to be, fully up to date on everything it's doing. So the next question is from JB. Implied volatility keeps trending down for Zoom, Tesla, and others. What are your views on holding equity, being long leap calls or short leap puts for companies with a bullish outlook. Well, we've sort of talked about that with Tesla. We've done that. We've sold LEAP puts, deep in the money LEAP puts. We sold earlier this year, I think in end of Q1 or beginning of Q2, March or April, we started selling a bunch of those 1,000. We converted much of our stock to selling 1,000 strike 2023, June 2023 Tesla Leaps. And that's turned out to be good. I think we sold around $500, around $350. So we've collected a lot of premium already if we close it all out now. So we do like that idea, selling, for Tesla. And the implied volatility has come down quite a bit, I think, since Tesla's kind of hovered in this range of 600 to 800, or I guess you could say, or 500 to 800 for, 9 months now. So, and we were talking earlier in this call about, or this chat about the advent of the full self-driving and the huge disconnect there seems to be with, otherwise super smart people on Wall Street, or seemingly super smart people on Wall Street with what's going on at Tesla and in their full self-driving. And that disconnect at some point will get connected. It's just when. And, unless something happens to Tesla's full self-driving and it turns out that it's not working the way, to me, I watched a ton of it. I've been watching all weekend. I've probably spent hours watching a dozen or more different self-driving videos over the last few days of the new version. And I spent a lot of my time doing that type of research. And to me, the full self-driving version 10 is incredible, like incredible step change. It's not close to perfect, but for certain drives, it's perfect. But other drives, you really have to watch it. And but just the fact that it gets certain drives perfect is huge. So it does things that are surprising. I watched one of like Omar's videos where I was going in San Francisco and like there's cars parked on both sides, like sort of a single lane tight street, but it's a two-way street, but the car has to drive in the middle. That's the only room. And there's another car coming the other direction, and the neural network is smart enough to pull over in between two cars parked on the right and kind of wait and hesitate for the other car to come through. And the other car also waits and hesitates, and long enough that it makes sense for Omar's car to start pulling and driving and take the first. And it did it. And it did it without kind of any awkwardness like a human would do. It was pretty incredible. So there's lots of things like that going on with this neural network that are just, I think, going to blow people away as it becomes more wide known. So we do like Tesla long term, medium term, and the leaps, low implied volatility might be a attractive entry point for the calls at some point.
Yep.
All right. So let's just make this the last question. What do you think about Redwood Materials factory announcement? I read a little bit about that. JB's new company, Redwood Materials. I tried to look it up to see if it was like a pink sheet stock or a SPAC, but you can't even. It's not publicly traded to invest in. I was like, that guy. He has connections and he knows what he's doing.
Probably get a $20 billion valuation if he went public via SPAC. You don't need revenue. You don't need
maybe higher. Look at Rivian. Yeah, I mean, look at Rivian. Look at QuantumScape. Just him being on the board of QuantumScape made that valuation like $50 billion for a while. I wish we shorted QuantumScape when we first wanted to. Yeah, but anyway, what do you think about this, Matt? Do you have any thoughts? Did you read the press release or anything?
So I saw an article on Bloomberg. It was behind a paywall, so I didn't get a lot of the details. But it's a company I've been watching for a while now. JB did a video, let's say it's probably a year and a half ago, where he just kind of showed how challenging it was to actually get in all the raw materials, all these cell phone batteries and laptop batteries and all this stuff. And just the difficulty of kind of stripping out the relevant pieces of that and sorting it out and getting it to the state where it can be processed into a reusable material to kind of complete that battery supply chain. So I'm really encouraged that they're kind of scaling up what they had been doing at that pilot plant to like a whole factory. That's the clear good news. I think they're a ways away from really being a meaningful impact or like a meaningful source of, kind of new lithium or nickel or a lot of these valuable components of the battery supply. But I'm just glad that he's out there doing it and trying to address the scale issue at the back end of the supply chain. Because if we just didn't address that, if we didn't have smart engineers trying to tackle that challenge like JB is doing, I think 10 years from now, we'd have like this major kind of environmental and supply chain cost issue going on as we need more of these inputs going into the supply chain. So I'm just glad that he's doing it. Honestly, that's my biggest takeaway, that they've got some success in trying to scale this up now.
Yeah, and I think speaking of the, JB was the top dog at Tesla for so many years. I was even convinced he was going to take over Elon's role one day, like when Elon exits in the 2020s or whenever. I thought he was clearly like number 2, I think, in all of Tesla. Then he left. It was a big shock in 2019, and I wouldn't be surprised if he sort of got Elon's blessing to like say, okay, I'm going to form a company that's going to help recycle batteries for everyone, and Tesla will be one of our customers, or we'll work with Tesla too. And Elon's like, yeah, you go build that business unit, and we'll work with you how we can when you build it up. Because I know Elon's talked about in the past how they want to, theoretically you should be able to recycle all the batteries to be new batteries pretty easily. And so maybe he sort of outsourced it in a way to JB in this extra company as opposed to another conglomerate within Tesla,
Yeah, it makes sense. And I could see Tesla acquiring Redwood down the road, but I think right now it probably doesn't make sense to do that.
No,
but,
they have so much on their plate. Maybe this is one thing.
Yeah.
He's like, I'll just outsource this one to JB and let him do it, and he's competent. And then if he can do it, then we'll be their customer or whatever. Or we'll let them.
Yeah.
Yeah.
I remember seeing that back in 2019 when this happened, JB sold a decent amount of his Tesla stock to presumably to fund some of the stuff going on at Redwood, and it was like right before the 10x increase. I just felt so bad. I was like, no, JB, you could have just waited one more year.
Yeah, that's too bad.
I'm glad he's doing it, and I'm sure he's doing just fine.
Yeah. Yep. All right. Well, that concludes. I think we got some interesting stuff coming up. Just so everyone knows, we have we're going to interview Chuck Cook next week about his experience driving full self-driving, and just ask him some questions, and excited to learn from him. And he's one of our favorite YouTubers, putting out his test drives and such. And then we got some other interviews coming up. I got an old friend of mine who we're going to get on here to interview, who sort of the old IT friend, Interactive Brokers IT friend of mine, who originally invested in Tesla with me back in 2011. And we kind of went through that journey together, and we can talk about the early days of investing in Tesla and what it was like. And he's got a lot of good insights. I still talk to him and ask his opinions on things. And then Yashu from that podcast or the YouTube channel Hit That Bid. I was interviewed by him a few weeks ago, but he's gonna come on, I think October 12th. He's gonna co-host the show with me. I think you're out that week, Matt, October 12th, yep. And Yashu's agreed to co-host with me that day, and we'll do a normal discussion format like we do now. And then I said maybe part of it we can do his kind of format where he gets to show like the charts and more technical indicators we can talk about, whether it's max pain for the options or whatnot, and kind of give an experience of what he does to our viewers. So yeah, it'll be fun. The next few we're planning to do more interviews going forward. We got some more people lined up, I think. So we'll talk more about that as those come closer.
Yeah, we got some good stuff. I mean, I think with Chuck Cook in particular, one of the other kind of controversies, I use that with air quotes, I think it's just healthy kind of debate about topics. But there's been this controversy of did Tesla misplace the cameras on the B pillar? Do they need another camera by like the headlights or further up in order to see around blind spots? And Chuck Cook, I think, has he's got one point of view on that, which is, I think, probably different than Elon's and different than some other folks, but he's doing it from a place of credibility and just what he's seeing, and I think it's really important for investors in general to kind of challenge their own thesis and take in all sorts of information. So I'm really curious to hear what Chuck thinks about Beta 10 after driving it for a couple weeks at that point when we interview him. And in particular, Elon just addressed this issue finally on Twitter, finally saying the car will scoot up to see around and then quickly reverse back if it sees a danger. So Elon is basically saying, that he doesn't think it's an issue, but I'm very curious to kind of get a lot more of Chuck's thoughts, because he's got a highly credible background as an airline pilot and a lot of technical expertise. So we got a lot more good interviews coming, that's for sure.
Yeah, good. Cool, Matt. Well, thanks everyone for watching, and we'll see you next Tuesday. We'll be on again.
All right, thanks.